Hey everybody, welcome to 12-Minute Trading, our weekly update. I hope you are doing well. Dave Lucas here. I am flying solo one last time until Doc Severson get back from his trip over across the pond there. I want to just check. I want to make sure everybody can see and hear me okay. So let's just give it a second. Let's make sure that everybody can see and hear me okay. Looks like feed is going pretty well. Let's see here. Yep, all good. Well, I hope you guys are having a great start to your week. We were here last week. I talked about it and I said, hey, I wouldn't be surprised if we saw some selling into Powell on Friday. And we got that, right? We got some of that selling. And then Powell came out and lo and behold, it turned dovish. At least that's what the market took that as. And we saw the result of that, right? That just really that rebound basically making up for that selling during last week. We still haven't hit new highs yet, right? We still haven't gone back to the new highs. So we've been walking sideways now for the better part of a week, really up and down, but kind of staying in that range, right? And so now it gets interesting. What do we get next from this? Where's the market going to go? My thought on this is Powell really opened the floodgates. He did a few things. Number one, it looks like he suspended the 2% target. It looks like basically they're like, well, the 2% target's not so much target anymore, meaning that they're going to allow higher inflation. He opened the door to lower rates in September, right? And which is what the market's looking for until it's not. We'll talk about that in a second. And he changed his tone. And he's got a number of governors that look like they are members of the board, I should say, that are looking to that are more open to cutting, right? So I think here's what I expect. I think we're probably going to see the markets be positive up into the meeting in September. How much more higher we go, I don't know, but I would expect some positivity up into the meeting in September, and then the potential sell the news event on a rate cut. Now, every time we've seen rate cuts in the past, typically we see market sell-offs. And that's usually because it's signaling to the markets, hey, things aren't going as well, and we need to cut rates to stimulate the economy. So the future is looking like we may be going into harder times, like a recession or something like that. This time may be different in the sense that a lot of this drop in rates is not driven so much by an economy that is, looking worse and worse. Although there are some cracks that are, underlying cracks. Uh, there is it's really more driven by the debt. It's driven by the fact that the debt service is costing a lot of money. And so what do we need to do to service that debt? We need to lower rates because we need to refinance debt on short-term intervals, right? At lower rates and keep turning it over at lower rates until the long-term rates, which has been pounding Powell about, right? So they may just be succumbing to that pressure. The markets may like that some, but keep in back of your mind that typically when we go into a rate cutting cycle, the initial move in the markets is down and then some recovery. So we could see kind of a sell the news event after that. Now, the other thing is that there are some cracks in the market. Delinquencies are way up. Like a great example is like lumber. Lumber prices are tanking, right? So if lumber was in high demand for building homes and doing things like that, you wouldn't have that. So that a lot of those are again those macro signals you look for that spell trouble like down the road. But those things are starting to be out there. The other thing to think about too is just the fact that we could be getting into a more inflationary environment again, right? If the inflation's not come down, it's hugging that 2.5-3% range, and then we start cutting rates into that, and we're still printing money like we're still going to. I think the deficit is going to be 1.82 trillion this year. I know last July it jumped up huge of what we spend, and so we're on that track for 2 trillion in deficit spending. You cut rates into that. This reminds me a lot of like the 70s where you had that initial spike of inflation. They thought they got it under control, and then it reared its ugly head again, only into the early 80s where it took Paul Volcker to jack rates to 18% to finally get it under control, right? And that brought on a really, really nasty recession. That was a couple of years that Reagan's first term that had to go through. So that's something to think about. I don't know where we end up with all of this. All I can say is these are a few things that I'm preparing for either way. In the meantime, like I said, I think short term we get some market positivity into that. After that, September's typically a volatile month. Maybe get that volatility around the meeting. Fourth quarter is usually pretty good, right? So I could see us, having a dip, maybe a 5%er late part of September, and then rebounding and going through the typical fourth quarter rally that you get and everything. So let's jump in and let's look at some of the charts, and we'll talk a little bit about this stuff. So here we go. So I'm going to pull up the SPX charts on my other screen over here. You can see, so here's the SPX. This is that sideways action I've been telling you about. You can see we've really gone in this like range for several weeks now. And you can see, hey, we got charged up in our energy. That's what happened. This was all charging the energy up because you're really not going anywhere, right? Spiked on Friday. That looks like it started to drain that energy out. A little bit lower today, but hey, after the move, 100-point move in the S&P or so, 800-point move in the Dow, a little selling, not a big deal. What we want to watch from here is, can we start to tack on to this over the next few days? If this thing comes crashing back down, then this energy may be released into the downside. And maybe we get, that move lower prior to the Fed, right? So something to think about there, but that's kind of where we're at. This moving average continues to be a good thing to watch for places for reversal. That's just the 1-year daily chart, standard Bollinger Bands with the moving average, 20 period. And so now you're looking at this weekly chart. Look how charged up the weekly chart is after that move last night. This is all sideways action, right? So now this thing's getting really charged up, getting ready to trend at a high level again, right? So this is a pretty big deal. When this thing gets charged up, you get massive moves coming out of it either way, right? So fully charged back here, tacked on, what was that in the S&P? About 4,900 all the way up to 5,600. So a 700-point move, right? Off that charge. And, here's one that was fully charged, pretty much to fully charged back here. And it went on forever, right? So we got, 4,100 and change all the way up to 5,200 change, about 1,000 points. So are we starting to roll over here and going to crash back down? Or are we seeing something like this, where we're starting to roll over a little bit and then boom, off to the races again? It's a little hard to tell yet, but right now, the markets, there's not a lot of headwinds in way. If the Fed's cutting rates, that sort of thing, that's a lot more money sloshing around, more liquidity, that may spell that this party is going to continue to run. And maybe once this expends itself to the upside and gets exhausted, maybe that's when, we have to watch out, right? It's too early to tell, but that's some thoughts to read here. Now, something that I did think was interesting is that the NASDAQ has not charged up. It has not come all the way back like you're seeing with the S&P, as you can tell. And so it's kind of hugging that moving average right here. So it's got a decision to make because this shows exhaustion. So it's going to be tough to trend, meaningful in either way until this gets charged back up. And then the weekly chart is getting charged back up and you can see it's just kind of sideways, right? So again, are we seeing one of these where we kind of roll over and then poof to the new, and you see this a lot. Here's one, roll over and then bam, so that's typical in bull markets. So do we see kind of that same thing here? And then we're off to the races once this gets charged? That's what we have to watch. And this is going to start, we're going to start to have an idea on this probably over the next few weeks or so. In fact, just in time when I've got to go over the pond. So Doc will be back with you guys. And then I've got, some travel and stuff like that for the Ironman World Championships coming up in mid-September. And I will say typically markets tend to behave very interesting when I travel. So, we'll see what happens with that, But anyway, so that's what's going on here. So it's a little different than the S&P. And then the last one, when we're looking at the indices all the way here, let me jump over to the Russell. So the Russell had big move Friday, and the out of all of them, it has not come back to new highs or near it yet. So it definitely has finally broken above the 200-day, right? And it seems to be stair stepping higher. The Russell will do well in a lower rate environment. Those companies are very debt laden. They need to refinance at cheaper rates. So the cheaper money is, the more the Russell stocks can do better. And so that's why you could see as we get into like a deregulatory environment, a lower interest rate environment, the Russell could cycle back around and could be the leader. So very interesting right now to watch this. And so you can see it's pretty well charged too. So it's definitely it's in a place where it can start running any day. So that overall is kind of the top down on the indices. So we're kind of getting to that point where over the next few weeks, these things on a weekly chart basis have to, make their decision and decide which way they're going to trend. We're going to figure that out. It's going to be a big trend. It will go on for a couple months in either direction. Well, I shouldn't say that. If it's to the downside, it could be very quick. It could be very nasty. That's the only thing to the downside. If we continue higher, though, it could go on for 6-8 weeks or so. All right. So just a couple things for you. At the end of last week, I talked about it in last week's session. I talked about Palantir being a good opportunity, bottoming out right around in here. Pretty tired on the energy, sell into. As of Friday, I sold into that down around 100 or so, below the 200-day moving average. You got a nice 8%, 10% return on that, on risk for that. So that's something to look at. I'm watching Carvana. That's another one. Sold into it back, as of last week. Looks like it's starting to run higher again. The energy's starting to release. That's one to watch. One that I keep watching is MSTR. It seems to be at that point where it's walking sideways, kind of forming a bottom, and I'm able to get positions way down in here on it. So I'm taking advantage of some of that stuff, and so that's something to think about. Now, the big event of this week, obviously, is NVDA earnings. That is coming up on Wednesday. So we'll see if this thing kind of breaks out of this channel that it's been. You can kind of see, look at the squeeze coming in on the daily chart. So we've got a squeeze on the weekly chart. This thing is, got enough energy to trend. And this is like a perfect, look at that. It's like a perfect flag, right? Perfect bull flag. So, but as NVIDIA goes, the market goes right now. It is such a big portion of the market. If NVIDIA misses or has a lower guidance or something is off in these earnings, it will bring markets down lower. And that's just, that doesn't have to be long lived. It can be over the course of a week, but it would be a, 2 to 3% correction if NVIDIA gets a big sell off. So something very important to watch on Wednesday. Another thing just to think about from risk events between now and the Fed, the Powell did state that jobs are now a driving factor. Unemployment's a driving factor. And what they're watching. So remember, the next jobs report isn't this week, but it's the following week. And so the next jobs report could be a big market moving event because it's a precursor to the Fed meeting, right? If the jobs are still weak, that helps the Fed cut rates. If the jobs come in very strong, well, then all of a sudden, that can give the Fed excuse to stay put. The only other thing is this Friday is PCE, which is the Fed's preferred gauge inflation. I don't think the market's paying as much attention to just the raw inflation numbers anymore because the tunes change, right? With what Powell said, and there's more focus even on the employment side now. So that's overall, guys. That's top down the market. That's some tickers that I think are important to watch right now, and just giving you some insight into things. If you have any questions, please feel free to drop them in the chat so I can answer. If you've got anything you want me to analyze, let me know. I'll analyze it. We'll stay here for another few minutes, and then I'll let you guys get back to your day. So we'll give you a minute or so to pop those in there. Doesn't look like there's anybody today. That's fine too. Oh, you know what I didn't do? I'll do it for you guys real quick, is gold. So gold had a big move on Friday as well. So why is gold moving up? Well, right? Fed's cutting rates. inflationary more environment. So you get a little spike in gold off of that, but it still remains in this massive channel, this massive, what looks like a bull flag setting up. And we're getting really close to the release here. See it? We're starting to roll over a little bit. Gosh, it's right in the middle. Which way is going to go? I think we're going to come in, one day this week or maybe even Friday with PCE, something we're going to come in and there's going to be like this giant move in gold. Like GLD is going to be like $7-8 in a day in a direction or something like that to really, kick this thing off. So keep watching it. Keep watching for which way this thing's going to go, and we'll see if there's if there's any opportunity there. Take advantage either way. Again, you don't have to be right. You just want to have it confirmed. Usually, when you get 50 on the weekly chart or so, and you got a direction either way, that's pretty confirming, and you can just take advantage and run with it. So awesome. All right, guys. Well, if there's no questions for this week, that gives you a pretty good idea of where things are at. We'll see how this week plays out. Remember, NVIDIA on Wednesday, and then PCE on Friday. Doc is back next week. We'll be together, and actually, no, it's a holiday. We won't be together, so we get a market holiday next Monday. So Labor Day, right? So we get that day of time burn for you option sellers out there. So after that, then Doc and I will be together the following week, and then I'm off for my trip, and it'll be Doc with you guys solo. So thanks for tuning in, guys, and we'll see how this week unfolds.